Hey guys, welcome back to another video. Today, before I get into any market stuff or analysis, I just wanted to mention something that's been going on. I've been doing this thing on YouTube every single day, live stream videos, really been going kind of crazy in terms of work effort. And I wanted to announce that I'm going to be taking a little bit of a hiatus from YouTube, probably for the next like 2 or 3 months. So I might not be making any more videos, maybe until mid-year or towards the end of the year. I haven't made up the decision, but I'll probably just be taking a long duration vacation and stepping away, just because, April Fools. Yeah, I'm not going anywhere. I love making this stuff too much. I am just as enthralled by it as a lot of you guys are. Let's jump into the normal video, and I'm not going anywhere. We got markets to cover, and I'm not going any place, anywhere, anytime soon. For anybody who I might have scared out of their pants or anything like that this morning, I apologize. But markets are making significant moves on this April Fool's Day. S&P 500 dropping pretty hard here, US 30 down, and the NASDAQ tried to hold in there, was defying gravity, and then dropped off anyways. The pound and the euro are down here, and the oil market flying high while the gold market dropping down hard. Why? Well, it comes down to 3 letters that have a lot of impact on the markets. This morning we had PMI data for the manufacturing side of things. So manufacturing PMI data came out and it was a doozy. It came out positive for the first time since October of 2022. Check this out. So here's a look at the latest data in terms of PMIs. 48.4, 47.4, 47.7, da-da-da-da-da. The point is they're all below 50. 50 or greater marks growth in the manufacturing sector. We have not seen positive growth in the manufacturing sector. We've seen decline since October of 2022. But today marks the very first time since that day that we've got ISM manufacturing PMI coming in hotter than expected and positive, 50.3. This is actually really good news in terms of the economy, right? Because this is an improvement. 50.3 is much higher than what was expected, and this is moving some markets pretty substantially. By the way, this number, the services PMI, which is the services sector of the economy, will of course come out on Wednesday, I believe. So Wednesday we'll get that side of things, but so far looking really good. Now, what do you think this does for the dollar when you get really strong economic data? Well, the dollar loves it. Not only does it love it, it's actually threatening to break out through the highs here. Now, I gotta say that this is a little bit early in the week. We still have services PMI, we have JOLTS this week, and we have NFP on Friday. So there is plenty of data that could counterbalance this, but right now the dollar's looking real healthy compared to its peers. Now, of course, we still think there will be rate cuts this year. That's still the expected output. But with the central banks of Europe also looking to cut rates sooner, the dollar looks relatively pretty attractive. Not to mention, we can see in the yield side of things, check this out. The 2-year yield is up 1.44%, the 10-year is up 2.5, and the 20 is up 2.5, give or take as well. What does this indicate? Well, this indicates that people are thinking, the bond market is thinking that the economy is going to hang in there, is going to be strong, and that could lead to higher inflation for a longer period of time, and that could keep the Fed's fund rate higher overall, making the bid for bonds much higher, right? Jumping up by 2.5% on the day for the 20 and 10 year, and the 2-year also seeing a little bit of a bid as well in terms of yield side. So that's kind of interesting, and of course, good for oil. Why is this good for oil? Remember, guys, that if the economy is strong, if expectations for the economy in the United States are strong, the demand for oil could go up. Because again, a strong economy demands more oil. Demands more oil means the price of oil goes up. So oil's making a move. We are long oil. I've mentioned this overall. Let me go ahead and log in. I'm not sure what my thing got unlogged in, but let me log in really quick. Okay, so here is my current position on oil. I'm up $6,610 on this one, and gold, we'll get to that in a moment. I'm also up pretty good on that one as well. Now, oil is ripping here today because of the PMI data that came out, and I think that this could continue to be a great breakout trade. Oil is trading above its previous high at 83. Love to see that, and it's now challenging to even test retest the 84 level. Really good sign for oil bulls like myself, and we'll see if that can continue. Again, the dollar strength is also kind of the oil market strength right now, because that could mean, you know, the economy hanging in there. That's going to be good for the demand of oil. Now, on the other side of things, not great for gold, right? Why is this not great for gold? Well, again, this could push back on the idea of rate cuts, and anytime that rate cut story gets challenged, gold's not going to like that. Gold is going to do really well when rate cuts are expected to come in fast and heavy. That's when gold is going to do its best. Right now, we see kind of today's data pushing back a little bit on that. Now, recently, it's been great. It's been like one-sided trade for gold, which has been great. As I mentioned, I am long gold and oil. So gold being up here today, or overall still slightly in the positive, but gave back a lot of its gains on this PMI data, as one would expect. But I've been long in this. I've got two different positions, two different entries on gold. And again, as I mentioned, my net overall position is up about $11,000 on that trade. For technical traders watching the dollar, the big thing here today is to see if we can actually close above this level of resistance. If that closes near current price, around 105, that's a really bullish thing in the short term in the dollar in terms of price action, I would say. Overall, oil continues to get a bullish reading on the Edge Finder. This is where I found the trade initially. It was one of the top scores for some time and has been. On the flip side, we have some bearish readings as well. Again, feel free to pause the video if you want to look at all of these. We also got the latest round of commitment of traders data. We could see oil, gold, silver still the top buys in terms of institutional money. The Dow's up there as well. Like to see that. And then on the latest weekly filing, which we find to be very valuable to traders, right? Traders should be paying attention to the latest filing, not so much the all-time net positioning, because this is more for investors, like longer term stuff. This changes very gradually. This changes very quickly week to week and can actually give us some shorter term perspective on what institutional money is flowing in or out of in the financial market. So we have SPX, CHF, gold, these things getting some bullishness. And on the flip side, you got NASDAQ, the Kiwi dollar, so on and so forth. So there's a couple bearish things, pound in there as well, which looks continued to be bearish overall. Very interesting to see that. Also, I should mention that this is the first day of our 45% off sale that we are currently doing right now. This is the biggest sale that we do all year long. And if you're a regular viewer of my channel, you may have seen the Edge Finder every day for the last month or 2 months or 6 months. I want to just mention that if you've been thinking about getting a copy, today is the best chance of the entire year to do so. You can get 45% off. And you might be wondering, why are you doing such a big discount? The reason is because this month marks 2 years, the 2-year anniversary, if you will, of us starting the development of the Edge Finder. It is an incredible product that so many brilliant people have been involved in building up to this point. And we, to celebrate the 2 years of progress, are doing a massive discount sale. You can find out information in the description down below. The very first link in the description, the top link, is a chat with us link. If you click that link, it will take you to somewhere where you can speak directly with someone on my team and ask them about this sale so that you can get that subscriber discount of 45%. Don't miss it. Also, just for reference, this is what the old Edge Finder looked like on your screen. Way back in the day, it's come a long way since then, and it's only getting better from here. So here's a trade that's not going so hot for me. This is TLT, which I sold puts on last week. And what we could see here is that the market went in my favor initially, but has come all the way back down and now is actually a trade that is in the red, because what this is saying is I promise, basically with the option that I sold, right, the 10 contracts that I sold, to buy 1,000 shares at $93 per share. So if this trades all the way down here, I still have to buy them at $93 a share, which obviously is not ideal, but you can see it's turned all the way around on me. I was up, overall like 600 bucks. Now I'm up minus 170. So I've had a pretty big shift there and may still need to buy the shares if the price continues to go down on TLT, but I think we could rebound. And if we don't, I don't mind buying the shares as a part of my mean reversion strategy that I do with options. Here's my FXI position. This is the Chinese stock market large cap ETF that I am currently, I'm long the shares. So I'll show you this position. I'm long the shares. I have 2,000 shares at $22.90 a share. And then I've also sold calls. Both of them are in the green, but if this market continues to move up, this is a covered call position because I have 2,000 shares and 20 contracts that I've sold in terms of calls. If the market rips, I'll be taken out of my full position for a profit of somewhere in the neighborhood of about about $7,000. So it might be a little bit less than that, but I believe that's how the numbers work out. Here's the S&P 500 pulling back here today. I think that it'll be very interesting to see how this day closes. I've mentioned this before, but recently, whenever we take big sell-off days, by the end of the day, they typically are back up. Now, I would love to see some follow through the downside because I would like to be a buyer of some of the indices. That being said, though, if we do get a change of behavior, meaning that a sell-off is actually followed by more sell-off, that would be change in pace compared to what we've seen recently, where you get these big sell-offs followed by rips, big sell-offs followed by dips. You can see that's been a theme. If we get a change of behavior, I would say that that could mark perhaps a bit more of a pullback is in store for the S&P 500, the NASDAQ, and the Dow. All three of them are just about in the red. The NASDAQ is just very slightly at the time of recording this in the green. Here's the Russell getting sold off even harder than the others, 0.7%, let's call it, down on the day. Here's some foreign non-US indices. We got the FTSE, got the DAX, the Nikkei. So just seeing a little bit of a sell-off everywhere except China, it seems like, which is nice because that is the only one currently that I have long exposure to. And here's a look at retail positioning. We can see gold is just about mixed. Indices now starting to show, again, retail traders very much short on those. A lot of the metals, as well as some currency pairs getting some contrarian sell signals as retail traders being very long on them. Also, guys, I mentioned the brokerage that I use to make these trades. If you'd like to sign up with WeBull, you get some free shares if you use the link that's in the description. It is a referral link and it's a totally optional thing. If you'd like to support my channel, you can use that link. Otherwise, you don't have to, but it is full transparency, a referral link. Also, if you're not in the US, there are some other great brokerages that will let you trade CFDs, things like that. And there's some great sign up perks that you can find in the description as well. Again, same thing applies there. They are referral links, so your choice if you'd like to use them. Thank you very much for tuning in to today's video. If you appreciated this content, make sure to hit that thumbs up button and subscribe, and we'll see you back tomorrow. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel. And we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern, broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.